Let's move on and actually just highlight quickly in terms of Indigo that we were talking about. Strong set of numbers reported by the company. Revenue surely saw a growth of 26%, and factors that supported is higher capacity, air traffic, ticket prices, PLFs, as well as lower fuel costs. That is something that aided in the quarter gone by. Capacity and air traffic grew by 14%, PLFs improved by 86% from an 84% previously, while overall the cash position improved also. Position also improved 20,823. That was up almost 8.5% quarter-on-quarter basis. Other than that, the company also said that for Q1 FY25, the capacity is expected to rise by 10 to 12% and 3 to 5% on a quarter-on-quarter basis. 10 to 12% is on a year-on-year basis. So for this, we have brokerages. What are the brokerages highlighting this morning is that we're seeing Bofa that maintaining a buy, target price hiked by 600 rupees, so new target price is 4,900 rupees from previous 4,300 rupees. They believe the temporary margin squeeze it could come in Q1, but earnings growth is strong, intact, and beyond the near term it looks quite attractive. Investec also maintains the hold, target price of 4,050 rupees per share. Q4 was a beat even for their estimates, and they're not anticipating anything in terms of a repeat performance in FY25. They see earnings peaking in FY24, so yes, keeping an eye out on that, and that's why they're maintaining their hold rating. But let's go across and listen into what the CEO of the company, Peter Elbers, had to say in terms of the growth drivers for the company, revenue, profitability, as well as the outlook of the company going forward.
Well, thank you, and pleasure to be with you today evening. Well, looking at the results, I think there's a couple of elements, and as always, it's a culmination of different factors. Let me start with the growth of the Indian market. And the Indian market, as we shared earlier, still being largely underpenetrated when it comes to air travel, even more so when it comes to international air travel. So there's a very buoyant market out there, hand in hand with the growth of the Indian economy. That's one part of the story. The other part of the story is really, we launched 2 years ago a strategy which has a lot of different ingredients. One was then to further build our network, to re-emphasize the basics of our product, to make sure that we continue to build our international routes. And basically what you have been seeing over the last couple of quarters, that all these elements are nicely coming together. So on the one hand side, the growth of the market and the buoyant Indian consumers traveling domestic and international. On the other hand side, our strategy, which is really starting to take shape and resonating very well for all the different initiatives. You know, for now, in the next foreseeable future, I think we have only one international destination which we have announced to be further developed, which is Jaffna. We have added actually quite a significant amount of international new destinations last year. A total of 7 new destinations were added. But importantly, and we continue to build on that, and we've recently also announced new flights, additional flights from Delhi to Phuket. We are increasing our flights to Central Asia. So our emphasis at this point in time is keep the international growth, but we are putting additional capacity to existing destinations, either by new routes or by firming up existing routes. And some of these new destinations, like the one in Central Asia, have been a big success, so we continue to build on those.
All right, then that's the word coming in from the management of Indigo. Let's move on.
If you like this video, then like, share and subscribe to ET Now.